Hi, my name is Jordan Wilson. Today we're going to take a look at some perceived disadvantages of the buy and hold investment approach. I say perceived because I do think there are legitimate criticisms of buy and hold, but the weaknesses that we'll discuss today I think are a little bit over the top, and they're not really true weaknesses. The first weakness that's often cited by people is that buy and hold is too easy. And yes, if you go back and listen to our advantages of buy and hold, that was an advantage. It is a simple system to implement. You go out, you identify a strong asset, you buy it, you hold it until you reach the maturity point that coincides with your financial objective, and then you liquidate. But the problem is more so that the easy side of it can make investors lazy, or they take buy and hold too literally. And that's more the legitimate side of the issue than that it is a easy or simple methodology. So you can't sit there in any investing process and just buy something and forget about it. Investments and portfolios need to be monitored and evaluated on a periodic basis. Maybe the investment has changed. What was best in class 10 years ago or 5 years ago when you purchased it is no longer the best available investment. New products come along. Existing products fade. Perhaps you invested in a company that had essentially a monopoly in its market because of a patent. And now the patent has expired. The moat that protected that company is no longer there. And they aren't the profitable company you had originally invested in. Maybe your personal situation has changed. Your investor profile has changed. And that needs to be reflected in your target asset allocation and the individual investments that you hold. So these apply to any trading strategy, not just buy and hold. But I do think there's a percentage of people that just say, oh, he told me to buy, hold until maturity. I'm going to buy it, toss it in a drawer, and forget about it. So you can't take things literally and to the extreme. And that's more the issue than the fact that it is a relatively simple methodology to use. Another perceived disadvantage of buy and hold is that it's unsophisticated. Successful investing requires complex trading systems, long-short strategies, butterfly spreads in my option portfolio. You have to watch the online and the TV talking heads, the Jim Cramers, the BNN networks, to hear what the latest wisdom is. What is the Fed doing with interest rates? What is the earnings report on Apple? We need to time the markets. What is OPEC doing? How is that going to affect oil and gas prices in Western Canada? Should I be buying junior oils? Should I be selling them? That's what investing is all about. And it's also sexy, or as I used to say in my younger days, the water cooler conversation. People would congregate in your office by the water cooler or the coffee machine and maybe discuss the television show from last night or investing. And I just did a covered call strategy that made me a bunch of money. And the other guy's saying, whoa, I just did a capital protected note where I invested in T-bills and futures to protect all my capital, but enjoy the upside of equities. And what about you, Bob? I bought the S&P 500 20 years ago and I'm just holding it. It's not sexy, it's not sophisticated. But the reality is that sexy and sophisticated are not the way to successful long-term investing. It is more the boring buy and hold, dollar cost averaging type approaches. But because it's not sexy and sophisticated, people say, it can't work. So that would definitely be a perceived disadvantage that just makes no sense in the real world. Another perceived disadvantage is that buy and hold can be stressful. And this is another area that we saw was an advantage of buy and hold, in that it removes the emotions from the investing process and helps you maintain discipline. And that is true, but it could also be a two-edged sword. If I'm holding an asset, shares of Tesla, and they're falling, and we're in a down market and Tesla's falling, and this is going on for weeks and even months, it can be stressful trying to maintain a hold mentality, especially when everyone you know is bailing. And that being a contrarian when you're watching the news and they're saying sell, 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 and you're holding, those are stressful on your investment psyche. So yes, that is a legitimate concern. I would counter that though by saying that, to me, if you're taking more of a passive investing approach, dollar cost averaging, and now buy and hold, things we've been building up to over the last few months, you're probably going to be more invested in low-cost index funds that are well-diversified products. You're not going to be living and dying on the fortunes of Elon Musk with a non-diversified asset. So that's sort of the counter to that concern on the stress, is that if you are invested in a well-diversified, well-managed investment product, that will help keep you sane and on the straight and narrow during market fluctuations. And also, I think that just being better educated on the investment process. So what we've talked about in the past is that over the long term, appreciable assets appreciate in value. And that there will be volatility along the way. and that using tools such as portfolio diversification help reduce your overall risk. How dollar cost averaging helps smooth market volatility on your purchases. So again, the more you understand about the investment process, the less impact market volatility or down markets will have on your emotions and your need to take ulcer medicine. Another perceived disadvantage is that you'll hear buy and hold is obsolete. In today's world, there's technical analysis, computer trading programs. Investors have much more information and access to what's happening within a company or within a market, whether that be domestically or even around the world. There's much better trading programs, faster, more flexible than you had 15, 20, 30 years ago. So there's more emphasis on the short term, identifying short-term price discrepancies, taking advantage, perhaps in an arbitrage situation, and making many, many trades where you're possibly only making a penny or two profit, but that adds up. So the view is that the real money is in the short term, not in holding assets for 20 years. Now again, I'm not a huge fan personally of technical analysis, and I'm not a huge fan of the short-term active trader, high-frequency trader, day trader, because I think that the successful ones, that is their full-time job, and you require a fair amount of capital to back you on that. If you're a doctor, a lawyer, a dentist, a nurse, a teacher who works an 8 to 12 hour day, do you have the wherewithal and the time to come home and compete against people that are doing that full time? And it is sort of a first past the post trading activity. Those that identify the short-term trends and can take advantage, they may prosper. But if you get in the second group or the third or the fourth group, you're the one that's left holding the bag at the end of the day. The other thing I think with the short-term traders, especially around the water cooler at the office, you tend to hear about the successes. You don't hear about the 6 or 7 failures, just that one success. And I think that distorts the perception with the average investor. So I do think that obsolescence isn't a legitimate criticism. And I do think for most investors that slow and steady build for the long haul is the better way to go. So that's a look at 4 common disadvantages that are cited in respect of buy and hold. I think some of them have a little bit of validity, some of them don't. And the ones that do have, the issue is more an offshoot in the sense that, yes, it's easy, but the problem lies in the fact that people become lazy. That's the bigger issue. So it's not the system itself that's problematic. It's how you work within the confines. Next episode, we'll shift our attention to what I think are some legitimate concerns. And then we'll try to figure out a few ways to tweak the buy and hold to make it more acceptable, especially in light of the legitimate grievances that exist. Thank you for your time today. Have yourself a great day.